Wait for guys to join. Right. Good afternoon, good morning, good night. Is there any more good? Okay, welcome to the analysis, the Sunday session. Right. Today I'll start off first, then we'll switch over to Lexis for fundamental. I'll just purely be going technicals. I'll be sharing something not exactly new, but something I've been doing a while already, but usually I don't really show it, which is trading a reversal. So I think people have joined more or less already. Let me start by sharing my screen. Let's go through the usual first. Let me get rid of that. All right, so I'm on a weekly chart on the currency index. And the first on my list will be the Canadian dollar currency index. You can see that previously this the Canadian currency has been very, very predictable since 2022. December 2022, you can see that it just bounced. This is your typical range pair currency. Yeah. So now it has reached the bottom. Naturally, we'll be trying to trade upwards. And it looks like it has a fair way to go, which is really good if you are going for trend trading. You can see that every time it reaches the extreme of the range, it just works back down, go up, down. Recently wobble a bit, and then I would fairly well expect to at least go to the halfway mark. Yeah, better if it goes all the way up. Yeah, but anyway, it will be safe to say that we'll be trading the Canadian currency, the CAD, for the next, I would say, a month. Yeah, I'll be just buying the CAD. Yeah, unless there's something really happening in the oil sector. But we'll leave that to Alexis. Now, the Aussie index, again on a weekly chart, is not as clean. Admittedly, it's not as clean, but it's still tradable. Now, it does not have a higher leeway compared to the Canadian currency, but we can expect about 1 or 2 weeks of rising, which for the lower time frame, I think is good enough for a 3 to 5 is to 1. 3, 4, 5 is to 1. Even on the daily chart, we can easily trade that at least for 1 is to 1 or 2 is to 1. Yeah, depending on how deep is the retracement. Yeah, but these two will be top of my list for trading for a buy. Now, on the Swiss index, now this is a bit tricky to trade. In fact, this is one of my trade that I'll be attempting a reversal trade. You can see that price actually does break this level. Now, this level is, I'm not going to say that it's a strong horizontal level. It has been broken several times, but I can't help it that you can see that in the past, this is actually a very, very strong reversal point. So price recently break through, have a gap, went back down, and then last week you can see that it basically just bounced off this level. I would say we have about 2 weeks worth of trading opportunity to trade back up to this level if it presents itself. Now, the point with reversal trading is that it might continue in a trend. Yeah, then there won't be any reversal setup. Yeah. But later I'll show you how I actually determine whether a true reversal is actually taking place. Now, sorry, take back my words. I wouldn't say a true reversal, but trading the first retracement. Yeah, for trend trading purposes, that usually proves to be the most profitable setup if you are willing to let it run. Now, Kiwi, a bit similar with the Swiss index, but I would say it's messy, right? If we had gotten this, then I would say it's beautiful, it's nice, but currently price is really, to me, it's just in the middle of nowhere. On the long term, it's really on a downtrend, but you can see the midterm is just really in the range, and it's not exactly right smack at the extreme end of the range. Yeah, I would say I would have missed the boat, not a particular pair which I would like to trade. Now the euro is kind of interesting. It's really at the extreme end of my level, which is a level which I love to trade. Whole number levels, you can see that price basically whenever it reaches this level is only majestically broken up once and then get back down. So price has come to here again. So for prediction is that price will get back down again. Yeah. So if it does comes down, I would say we have 2 to 3 weeks worth of downtrend that we can trade for euro. Yeah. Again, I park it in the middle because until it has proven otherwise, it's really in the unsure zones. Yeah. the British index, pretty similar as the euro. You can see that price. This is a really, really good level for us to trade. Yeah, you can see from the past it gets messy. It gets messy around this area, and then it gets bounced once, barely a bounce second time, and then this will be a third time, and it's coming back in the fourth. Yeah. So at this 130 level, we are anticipating a rejection. Yeah. So hence, when we anticipate something, I will need to wait for the technicals to affirm my prediction, and then I'll jump in. So usually that's where I trade my first retracement. Now I would say the yen for the past 2 to 3 weeks is particularly tricky to trade due to the BOJ intervention. But I can't help it. Look, price has a nice downtrend until it proves otherwise. I can't say that whatever has happened in the fundamental side, it will definitely take place. But on the technical side, you can see at the 70 level, previously it has proven to be a very, very strong bounce point. So now price actually gap up, and this is a very, very huge bearish bar. Now, say we have, if this proves true, then we have say 1 or 2 weeks of selling pressure before price. Now, if indeed it decide to bounce off here, then this would be actually the first bounce of a uptrend. But until it bounces off, we won't know. So I would say even for the daily to H1, we'll have a good opportunity to trade at least to this level. We'll see how it goes. And the last is DXY. Even from weeks back, months back, it has been a very good selling pressure. Yeah. So now I have no reason to doubt that it might continue all the way to the 100 level. Might encounter some resistance over here, but you can see that previous week it did attempt a rejection, but it has a very, very bearish close. Yeah, even at the 90 percentile, the below level. So I would strongly say that the price will actually healthily travel all the way down to 100. Yeah, that will give us about nearly a month of selling pressure. So now with that, we are going to attempt trading the strongest against the weakest. So first off my list would be actually the dollar CAD. You can see dollar is the weakest in my ranking and CAD is the strongest. So let's have a look. Oops, I shouldn't be doing that. Let me switch back. Okay. So like I said, dollar is going to be weak. CAD is going to be strong. So even on the, now I'm at the dollar H4 chart. The downtrend has already started. Very nice. So price, I'm just waiting. It has break. Right, definitely it has a very, very clean break. I'm just waiting for some sort of consolidation or even a nice retracement, and then I'll continue selling. But even for this selling, I would say at best, let's aim for this horizontal level. You can see in the past, this level, it has bounced off several times. Right, so don't be too aggressive on this. You might want to take profit at this level before price actually completely break. Yeah, because this level is proving too strong since back in April. Yeah, so it'll be wise to actually take some partial profit and then let the rest run. So top of my list will be dollar CAD. Okay, either wait for consolidation or a retracement, and will be nice. It will be great to go in. Next on my list, I'll be trading CAD yen. Again, in my ranking, CAD is the top of the list, so I'll be buying it. Now, CAD yen compared to dollar CAD is a bit harder to trade. It doesn't really have a nice uptrend path yet. You can see that basically price reverses from here and then it consolidates. Yeah, some might even spot this as a rising wedge, rising triangle. Price break, retested this level very, very nicely. I will just be waiting for another bullish bar. I don't really care about the price action, and then I will jump in. Now, for those of you who are more conservative, you might want to wait for a second retracement. Yeah, so again, a nice clean retracement before jumping in. For me, all I'm waiting for is either on Monday or Tuesday, a good bullish bar, and then I will jump in already. Yeah, this is a very clean break and retest for me. Aussie dollar, again, very similar to CAD yen. You can see that Aussie, second strongest on my list that I've ranked. Dollar is the lowest, which is the weakest. Now, this is what I would say is a very, very classic, nice uptrend already. Up, down, up. I'm just waiting for a down move, which is a retracement, and then I'll just jump in. I don't think I need any more explanation to this. Now, so after going through all this, which is the top three pair which I would love to trade, or just pending a very simple setup, next I'm going to go through is actually Euro Swiss, I believe. Yeah. So what happens if you recall, just now I was going through Euro. You can see Euro is at a very nice 110 level. I'm preparing for it to drop down. So that means the selling pressure. And then let's look at Swiss. Swiss, I'm preparing for it to actually have a short-term buying pressure. All right. So these two will be a nice opportunity for me to actually do a reversal trade or a first retracement trade. Yeah. Either of these two, if I get it right, usually it proves to be the a really running sort of a marathon trade for me, which I'm willing to let it run. Now, so let me see it. Okay. So if that can, again, Euro supposed to drop. Now what I'm waiting for, wait, what did I just press? So you can see that price, in order for me to actually trade a counter trend, I need a very, very nice trend in the first place, which Euro Swiss has given me in the H4 side. Now, what I'm waiting for price to do is actually for price to actually wobble around here and then go from below. Yeah, so this will actually enable me to jump in safely. Now, for those of you who have difficulty in spotting this, then I would say just go to your usual chart, your pivots. Now, the pivot has a very, very nice showing. So in the past, sorry, let me go back to the trading view. Let's say from this point onwards, you can see that Euro Swiss at this point, very, very similar. Price goes up, and then it doesn't really demonstrate as strong of a trend, but at the first point of break, yeah, some of you who are not not very familiar with trading counter or trading the first retracement, see from this point you can see that on my chart, which is 12th of July, at this point, where is the first signal for you to jump in? Refer to your pivot. All right, so from this point onwards, once an uptrend is established, and in your standard weekly pivot, if it breaks the support level below, this usually proves a crucial point for us to actually jump in. Uptrend, it breaks. You can see from here, downtrend, it breaks upwards. Right. So don't go looking for all sorts of breaks. We must have an established trend. Usually I would say about 3 weeks for H4. I would classify that as an established trend. Once it breaks, look for your first retracement or any sort of price action that you trade. Easily a 3:4, 1:3, 4:1. So Euro Swiss, what I'm waiting for similarly is for price to actually break the support level before I can trade downwards. If it doesn't, then go for a normal trend trading move. If it does, then yes, this is something I'm willing to let it run. All right, so that's all to it. That's how I actually do my first retracement trade. So with that, I'll pass over to Alexis.
Hi Lloyd, and thank you for that awesome stuff. Well, just gonna share my screen, and funnily enough, I'll just start with the currency pair that Lloyd was actually looking at, and this is the dollar CAD. Okay, dollar CAD is pretty correlated to oil. All right, so this is just an initial show of what I am actually looking at from a fundamental perspective when we're looking at oil prices. Now, if you notice on the screen, dollar CAD, there's a slight correlation to oil because there's two things. CAD, the Canadian dollar benefits from the strengthening of the oil prices due to Canadia's large import-export industry. And the US dollar is also affected because of its status as a petrodollar. So as a petrodollar, what it actually means is that a lot of countries that trade in oil, they actually purchase the oil in US dollars. So oil is quoted in US dollars. So a movement in oil prices, because oil is transacted in US dollars, therefore US dollars will also be mildly affected by oil. But largely the import-export countries, which is Canada, Australia, and New Zealand, they are what we call the condo currencies, the commodity currencies, where strength in oil prices will give it a very good boost, all right, and a weakness in oil prices will pull the currency value down. So it's a very complex balance of trade situation we're having there. But what is interesting to see is there is a certain lead towards where oil prices go, towards where certain currencies go. So you can see at certain levels over here, let me just draw it out on my screen. All right, that at some point there is a divergence meaning that oil prices and the dollar can actually move away from each other, and then eventually you can see that prices kind of catch up again. All right, catch up with the oil price. I mean, you can see over here, overall, there is mostly the prices actually follow the dollar can actually follows the price of oil, and then after that it kind of flattens out minus sharpness. So I'm on a daily time frame, and we have another divergence again over here. So what this means is when there is a divergence, as oil prices head towards a certain direction, eventually the dollar cap will kind of catch up again, depending on where the direction goes. So it's a very complex situation. But when we look at the dollar and the CAD on its own, what statistics does the dollar and the CAD actually bring to you now? As of a couple of weeks back, somewhere in I think the first week of August, all right, the CAD actually shows bearish signs of seasonality for the first week of August. So when we talk about seasonality, based similarly to the CAD, let's look at where it is over here. Right, you can see for the month of August into September, the Canadian dollar is relatively flat, all right? It's relatively flat with a potential uptick towards the end of August into September, which we are kind of entering in the third week of August right now. Now, the timeline for this is usually quite fluid, meaning that the move can actually happen early or it can lag a little bit and happen late, depending on where market goes, all right? So put it together, you get a Canadian dollar that looks slightly vulnerable in the short term, all right? But depending on if the Bank of Canada continues to cut interest rates, then the effects will be felt. And also what is happening on the US dollar front. Now, with Kamala Harris taking over in the markets, there is strength in the US dollar coming back to the markets, because they are expecting Kamala Harris to give Trump a really good fight into this. And if we follow the Fed watch, all right, the Fed watch is where there is a poll of where the interest rates are. So you can actually, I'm going to paste this for you guys in the Zoom link. You can click in the Zoom link to get the Fed Watch tool. All right, so I'm pasting it in the Zoom link. So what is interesting is there's dates over here. So if I click to 18 September, which is this date, there is only a 75% probability of markets of the Fed cutting its rates by 0.25% and a almost 25% probability of rates cutting its a bit more aggressive in the interest rates. But if a 75% poll tells the market that there is only a slight probability where the Fed will cut by 0.25. So where is the interest rate now? The interest rate is actually at 5.5% right now, all right? 5.5% is the current target. For it to cut 0.25%, there's a high probability in September, which means about a month from now, that the Fed might cut its interest rates, all right? And if we look on to 7th September, this is December, you can see the probability change, which means that if the Fed does cut its interest rates by 0.25% in September, then it might be it for the rest of the year, and markets will kind of respond and adjust to that in terms of where its balances are, all right? I do feel in November we should have a different reading because the election is up and coming, and we should have a clearer idea of who's going to win. And if just on an overall basis, if Trump wins, there is a high probability that the currency will weaken because of Trump's protectionist stance on the economy. If Kamala Harris wins, there will be a slight probability of the US dollar strengthening because of her stance of what to do with the economy. All right, so we have two camps over here, and that is why I think for the next couple of months into November, the US dollar will be a little bit volatile, a little bit more range bound, but we can expect a large range bound market that we can trade in. So back to the dollar CAD. Okay, back to the dollar CAD. What I am looking for, given its correlation with the oil price, all right, what I'm looking for, if you can see, price of oil at the bottom screen over here has just gone up to the $80 mark in the last week, come back down to the 76, giving us a nice, what I think one of Lloyd's favorite quotes is a break and retest of a level. And there is potential of oil price strengthening, which comes in line, all right, it comes in line to the seasonality again, where if we look at seasonalities for the oil prices, you can see that over here, there is a good probability of oil increasing in strength into the at least mid-October. All right, so oil has a high probability of a buy season. So this should give the Canadian dollar a little bit of strength. And what I am looking for as well, looking at the technicals of it, you can see on Friday we have a large red candle appear. If I zoom in over here, what I am looking for is a continuation of this move to the downside. All right. And again, while fundamentals give us a general direction of where we want to trade it, we always need to look at the technicals for confirmation and for entry. All right. So what I'm seeing now is the dollar CAD has already made this move down, giving a stronger CAD a little bit of a positioning. But again, we don't want to be caught in a retracement move. I would rather pick this up when price has come back a little bit, maybe over the top of this range over here, and take it towards the downside. First level of exit over here. All right, first level of exit over here. Unless price can confirm that it will break below this level, then only we can take it to the next level with one eye on the oil prices. All right, so I am actually $4 cash short in the interim, at least until the oil prices peter out. So when I'm trading Canadian dollar, always one eye close to the oil prices, just to make sure that we are in the general direction of a stronger CAD due to stronger oil prices. All right, so this is one correlation that I would like to watch. Now, another currency pair that I am looking for actually is the euro pound. Looking at the euro pound, the euro pound has just broken below I think what you can call this a pennant or flag pattern. Most flag patterns are supposedly upside, but of course the opposite happens from time to time. And when this happens, it gives a very strong strength to the bottom. And the reason why I'm looking at a euro pound short is because I'm slightly bullish on the pound. Now, for the pound, what has happened in the pound is that the pound has had a month back, a new president has taken over, prime minister, excuse me, and there is a little bit more good news coming out from the pound. When we look at the statistics for the pound as well, all right, over here, all right, interest rates is still high at 5%. What is on the positive side of the pound is that its inflation is kind of controlled near its 2% mark. If we click into the jobless rate to see where the jobless rates are, the jobless rate has actually fallen a little bit by quite a nice chunk of 0.2%, which is quite a nice big, instead of like 0.1, 0.05, it's gotten a nice big 0.2 chunk of the jobless rate. If this sentiment can hold, there will be more strength coming into the pound as well. All right, so I am looking for a little bit more strength in the pound because of where the fundamentals are as well. And this is why euro pound has become interesting to me, because when we compare this to the euro, let me go back to the euro over here. When we compare this to the euro, and we click into the jobless rate information, let me just go into. All right, you can see as comparatively to the euro now, don't mind the bigness of the bar, this has actually gone up 0.1%. All right, so unemployment has actually gone up in the eurozone, even though it's by 0.1%, but you can see here that euro is kind of losing its strength against the pound. It's kind of dragging down a little bit. There is something happening in the euro side which makes me lose a little bit more confidence, but the euro pound is one of those currency pairs having a weaker interest rate as well. I think the pound should outweigh the euro in the short interim. So euro pound is one of the currency pairs I'm looking at as well. Now, last but not least, this is what I've been looking at for for the last 2 weeks, but it hasn't quite appeared yet. Two currency pairs, Aussie Swiss and Kiwi Swiss. Now, what I do love about Lloyd's analysis is he tells me that there is a potential of a strengthening of Swiss, which is what I'm waiting for. Now, between the Aussie Swiss and the Kiwi Swiss kind of looks a little bit better at this point because of the technicals as well. It looks like the strength has faded off from this retracement move. And what I am looking for is for a short Kiwi Swiss move, because the Kiwi statistics is also not as strong. Now, if you guys want to find out more, if you are subscribed into the Sunday fundamentals I do at night, which is a longer session, and I can fit more in there, just join me tonight at 8:30 for the session. All right. In the meantime, that's all the time we have. So we have got a currency pairs, and I hope you guys have a great trading week ahead. Remember, no matter where the fundamentals or the technicals go, always use a strategy, have your risk management, and you guys will be great. All right. Thank you, and thanks, Lloyd, and thanks, Sam, for hosting the session.